grow. I have the power. I don't need to call my LPs, and I do. I get their advice. I weigh in. I communicate with all of them, but I don't have to if I want to do something that's different. Okay, maybe we might sell an asset because we're going to get a really good offer here. I don't need to go to a meeting and beg and plead that we can do what I want. I am the controlling member of the entity. Let's talk about LPs, limited partners, the people who invest in real estate deals. I am a sponsor, a GP. I run a real estate private equity company, and I deal with LPs. I raise money from LPs. I don't use all of my own capital to grow. Obviously, I don't have tens of millions of dollars sitting in a bank account going so that I can buy real estate. If you listen to episode 3, how a real estate private equity company works, then you understand the relationship between a GP, me, and an LP, an investor. Now, you have 2 routes to go as a syndicator. And if you're an LP, you should listen to this as well. But as a syndicator, as a GP, you can have a couple high net worth individuals, maybe a family office, maybe an ultra rich person who writes $5-10 million checks for you to grow. Or you can raise smaller checks, smaller amounts of money from a larger pool of investors. There's pros and cons to both. You'll hear many allocators like me, capital allocators, meaning I allocate capital, I deploy capital. You'll hear many allocators talk about how one LP who writes a $10 million check is a lot more valuable than many LPs because you have less paperwork, less updates. You have that one person that you can go to. You have that relationship. But I'm going to argue against that. I'm going to tell you that the way that I chose, the average check size of about $100,000, that's my average LP. The way that I chose lends itself to many advantages. A, I still get to know these LPs, not as personally, but many of them we still have calls with. Many of them have done several deals. Many of them text me and say, oh, Nick, thanks for the update. It was a great one when you let us know how Newfield was going last week. But no one LP has me by the balls. Sounds harsh, but not a single LP can tell me what to do, how to run my business, or make or break what happens. And if one LP changes their mind and all of a sudden they have enough storage exposure, or all of a sudden something in their family changes, or all of a sudden they're not going to invest in any more deals, I have options. Basically, I have the leverage. I have the leverage in the situation to, number one, get a little bit better terms. A family office that writes a $10 million check, they might say, if I'm going to write this $10 million check, you better not get a 50% promote, you better get a 30% promote. Or maybe the preferred return is not a 6% preferred return, maybe it's an 8% preferred return. I have the ability to say, all right, this is not really negotiable. This is what we're going to release. I know that I can fund this deal. I know that enough people are in my network to fund this deal. You need to deploy capital with me a lot more than I need your capital. Your capital is not the only capital in the world. And when that happens, when you get that dynamic set up of mutual respect, hey, I'm going to make you a lot of money, but guess what? I get to set the terms. You, as an owner, get more equity. So I'm working on a 50% promote, which if you talk to a lot of family offices, if you talk to a lot of big capital allocators from pension funds or endowments or family offices, which mean an office that manages a family's money, a super high net worth family, or a wealth manager, a group of people's families that put money in to invest with a certain individual. Those people frankly kind of think that their money is the only money in the world because they're used to it being that way. They're used to sponsors walking in the door and pitching them, selling them, you should invest with me, you should invest with me, you should invest with me. Whereas we don't really have to do that. When you have hundreds of LPs like I do through my work on Twitter, with this podcast and many other ways, we can say, hey, look, here's a deal. This is a deal in this town. This is the expected return. This is how the fee structure works. This is why we think it's great. These are the risk factors. If this deal aligns with what you want, commit. If it doesn't, then don't. There's no back and forth. There's no negotiating. There's no somebody who's calling the shots. There's nobody who has me by the balls. That's an advantage. And the second big advantage of having all these LPs, it used to be a nightmare to keep track of. If I was running this real estate private equity company on Excel and through email, like over half of PE shops are now, if I was running this company that way, it would be absolutely miserable for me when it comes to keeping track of it, sending distributions by check, recording distributions, emailing every investor, doing back and forth with every investor, raising the money for a new deal with 30 LPs. Our deal in upstate New York that we closed, the largest one of our life, was $13 million. We had 26 LPs, 26 different LPs, average check size around $190,000, maybe even $200,000. Now, it was a lot of work, a lot of emailing back and forth. A couple months after that, actually a couple weeks after that raise, we got on Juniper Square, sponsor this show. You heard the intro about them. And if you're watching the YouTube video, you'll see the little outro about them in that YouTube video. We can send distributions like this. One click of a button, we can send the right amount of money to all those LPs automatically through ACH. We don't send any checks. Juniper Square does the distribution just like that. The monthly report or the quarterly report or the management reports or the tax returns, one click of the button, it's emailed to everybody. It's communication with all the LPs right inside the software. Now, when you're raising for a deal, this is when it gets crazy. You're emailing, you're trying to get people to wire. You have an Excel spreadsheet of who's committed what that you're translating to your attorney. Technology makes that easy too. It's literally, I send an email out at 2:00. This happened a month ago. Send an email out to not even our full list, not even all 300 LPs. We send an email out to 10 LPs. And boom, the deal, a smaller deal, was funded in an hour and a half. 8 of those LPs put money into the deal right there without even scheduling a meeting with us. They signed all the documents. They completed it all right in the software. The advances in technology are making our lives a lot easier. So when you raise from smaller investors, you can get the terms you want if, of course, you have the network. And not a single one investor can dictate your life and how you run your business and how you decide to grow. I have the power. I don't need to call my LPs, and I do. I get their advice. I weigh in. I communicate with all of them. But I don't have to if I want to do something that's different. Okay, maybe we might sell an asset because we're going to get a really good offer here. I don't need to go to a meeting and beg and plead that we can do what I want. I am the controlling member of the entity. And if one LP doesn't quite like it, we can make it right with that LP and they can be out of our business. They're not for us. We can work with the people who are great and the people who like us and the people who like our yield, the people who like our plan. And as long as our strategies overlap, we can do business together. And if they don't, that's okay. So you, as a real estate GP, you have the option. Go sit in the family office, pitch your idea, try your best to raise the best terms that you can. You'll probably work on a 10 pref and an 80-20 split. Or you can raise money from individuals. You can raise money from accredited investors all across the world. And if you get a big enough network, if you get small check sizes, not one single person will be a jerk and act like their money is the only money in the world and try to really control you and what you're trying to do. So keep that in mind. The Nick Huber Show is sponsored by Juniper Square. And if you raise money for your real estate deals from outside investors, Juniper Square can help you manage the entire process. No more emails, spreadsheets, or scrambling to complete a raise a few days before closing. Investors can commit to your deal, fund your deal, and you can share updates, documents, and even send distributions right from the software. It's as efficient as it gets. I use Juniper Square to manage all of my deals, and it's an incredibly easy way to invite investors to the deal room, raise the money, and stay organized with deal docs and communication. And the best part, it makes me look insanely professional in the eyes of all of my investors. Visit junipersquare.com to learn more. Thank you for listening to the Nick Huber Show. Just wanted to remind you that we have a paid real estate community where some really special stuff is happening. People are breaking down deals. People are networking. People are, I think, even formulating partnerships inside this group. We have over 100 members now. For more information, you can visit sweatystartup.com/REC. And the first 299 members of the group to get some momentum get $200 off the annual membership using the code FIRST299, FIRST 299. And also, you can check it out for 5 days for $1. You make a $1 payment, you can check out the community for 5 days. Highly recommend it if you're serious about bringing in some other people into your network, into your life to help you become a better real estate investor.